This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. We're going to give you a stock market update for Friday morning. I'm going to go through the market conditions, and then I want to make sure we cover each of the individual time frames. The hourly's looking somewhat important in the way that it's developing, especially with today's reversal. So we'll touch on that today, maybe a little bit more than I have over the last month. Okay, so we're going to start out with the sentiment, and it did move up again a little bit on the total of the difference. So 36% more bulls than bears. We did pop over 56% again. So I'm actually moving this to the negative camp now. It's been lingering up here in the mid to high 50s for the bulls. Just a little too much bullishness from that standpoint. I mean, clearly when this gets over 40, where there's 40% more bulls than bears, then we're looking at something that can be a lot more dangerous, a little more cautious. But I think it's close enough. I had it kind of thinking it was sort of on the line. I'm just going to go ahead and throw it over there. The thing is that the condition is negative and the overbought, oversold oscillator is negative, but those aren't timing tools necessarily. I know an overbought, oversold oscillator you'd think is a timing tool, but the reality is that we're going to use the trend and momentum to really determine, once we go down to the smaller time frames, whether to act or not. Now, one of the key things that I've been leaning on is this look at this average true range on the weekly. You see how this has been dropping all year long, and that has not changed at all. There's no sign of increase in bar size yet. And typically you'll get an increase of bar size like we did here before we get a drop, or at least it'll coincide. We'll get monster bar here and this will really start to explode. But typically it doesn't happen in one bar. Like, it doesn't just drop like that and this takes off. It takes a little bit of time for this to sort of increase first, and then once we get there, then this thing can start to move to the downside. But we're going to need to this the size of the bars to increase, and it's just been way too quiet. Now, if we go to the daily chart, look at what happened in just a single day. Big bar shows up for the first time. Remember, it's an average, so it's an average true range going back 20 days. So it's just one bar like that. If we start to see some increase in size of these bars, we're going to get this turning negative, and that will increase the odds that we're going to at least come back and test this 18-week line. But I don't want to get too far ahead of myself, because we've got the trend and momentum to go through. I just wanted to make sure you understand that the sentiment and the overbought, oversold, and the volatility aren't really what I would consider to be timing tools. What they're doing is they're giving us an idea of what kind of condition is in place, what types of strategies works best based on those conditions. And right now, when we have low volatility and pretty strong trend strength, that's usually a very good market environment. So let's go ahead and move over into the individual time frames. Now, I've had this chart up of the weekly for a while, and if you notice what happened last week, we backed off the peak, closed off the high, and now we're doing it again. Now, we haven't finished off the week, and for all we know, news could come out in the morning. I know there's some new economic data coming out Friday morning, and if it's very possible this could come right back up and have a really good day tomorrow. But if it closes like this or worse, then we've formed a couple tails up here right into this zone that I was looking for as resistance. It's the upper channel area, and it's this price resistance area. Now, the good news is when you look at the momentum condition, this is very strong. There aren't really any sellers. We've got 8 on the negative DI. Look at how the MACD keeps moving higher. This is a pretty good trend. The other thing is that when you look at this, the 18 and the 40 are moving up at about the same rate. Let me just show you this. So if I draw in the slope of this line and then I put the slope of the 40, that's about the same rate. I mean, it's not like when you get into a dangerous position, it's the 18 doing this, it's doing something like this, and then price is way up here, and then you're stretched here, right? And you get this distance between these. We don't have that right now. We do have some distance to the 18-week, but if we can pull back from here, I think that would be pretty positive, actually. I think that would set up for another up move. Now, one of the things that I would be watching if we do start to pull back here and we break the 18-day, I'll get into the shorter time frames in a second, but I want to point this out. If we break and we get things correcting, what I want to watch is what happens to the bull bear ratio. Do people get more bearish? Do the bulls really drop off? If the bulls stay strong as this is dropping, then this could get worse. If the bulls are quick, we'll watch that in the market conditions week to week. If the bulls are quick to retreat and we get more bearishness and a lot of people think the market's going down, then this will probably act as a backstop and provide support. So something we're going to want to watch. I mean, clearly we want to watch the volatility on the daily since it's already starting to tick up. Now let's look at the daily in detail. One of the things that just took place based on today, and it's not a true pivot. So I want to point this out. I know this is hitting a new high after going sideways and then turning down, but this is not true divergence in my opinion. Comparing that to that, it's a slight sign, but we don't have a true pivot in place where I can say that this bar is just a single bar. So it's really hard to read that way. I think you could argue that, we made a peak here, we came down, made a pivot low, tried to make a new high, and it didn't confirm. So I could go with that. But usually when I see this happen in a single day like that, where we go to a new high and then come back down and it causes this kind of movement, I sort of question a little bit. What I'm looking for is this red line to turn up. So we make a lower high here, and now we've made a slightly lower high. We need this to poke up through this high, and then I think we've got the makings of some kind of correction and potentially finally breaking the 18-day. I will say that we closed below the MACD signal line here. And so we've weakened the case of the bulls on the daily chart. Okay, that's telling me that the trend is probably getting a little bit tired, but it doesn't mean that it's rolling over. So there's nothing more important right now than watching this 18-day. Now, when we go to the hourly chart, as I mentioned, as being kind of a little bit more important now. And why is that? Well, I mean, we've had this move to the upside, and you really could argue that we broke the trend line, we came back, and this was the test. Oh, this was really the test, but could still be considered the test, even though it went to a minor new high, and now we're turning back down. So coming back through here, you could consider a 1, 2, 3. Now, what's missing in this equation is the red DI really kind of proving itself. I'd probably want to see something like that develop, but look at the volume action here. I think that's significant enough that it's going to put some pressure on that 18-day line. So if that's the case, we got to be watching this a little bit more closely. I think a break of the 3 would be a little alarming if we play out that way, because this will strengthen, and then we're going to want to look for some kind of a lower high. Now, I tell guys that subscribe to my research that if you're hedging, you kind of want to put the hedge on as the 3 is taking place. Now, I probably wouldn't look at this as a hedge spot. And my reasoning is that I've been telling you is that I'm totally focused on the 18-day. I don't want to get whipped around in the short term right now. If we get another big red bar, right, we're going to break the 18-day anyway. And then I'm going to be looking for some kind of a retracement back up as a potential shorting opportunity. So the volume is alarming. The other thing that's a little alarming here is that we had pretty good trend strength on the way up here, and then I considered this to be a double top. I didn't think that was failure on the ADX, but we made this minor new high and then reversed. I mean, yeah, it did get over 25, but it's not anywhere near as strong as the prior peak. It's definitely losing a little bit of strength. But like I say, we've got some economic data coming in. It could be moving data. We could open up down here, or we could open up here. So we want to just know what our key levels are. That's how you handle this. You don't have to predict. We know what our key levels are. We know we don't want to short something in an oversold condition, so we probably don't want to short this here. We want to look for some kind of a retracement. But especially with the 18-day moving average like this, I'm waiting for a little bit more confirmation because this line has been so important. All right, so that's our update for the week. Let me know if you have any questions or comments. Thanks.